The broadcast is now starting. All attendees are in listen-only mode.
Hello to all traders. Hello to everybody who's watching us on our social media channels, YouTube, Facebook, and also the ones who registered with us to watch this very interesting and market moving, let's call it, event, our monthly engagement, of course, for the US non-farm payrolls. Today is Friday, the 6th of December, and we are expecting November's NFP data, okay? As you probably already know, we have the NFP release always the first Friday of every month for the previous month, unless if there's any holidays and there is some sort of exception rule. So we are heading for the last NFP for this year, okay, because the next event will be, if I'm not mistaken, around the 10th of January, and it will be for December. And it's very interesting to watch what is really going to happen this time around, because we've got also the last FOMC, okay, next week for the year, and it is believed, and also I believe as well, that this NFP is going to be also very critical with what is going to happen around trade war. And I will explain why. Because a positive number could take the pressure off Mr. Trump to go ahead with the December 15 trade war sort of phase one that would be originally starting, but that's not we're not sure yet if there is, of course, going to happen, but a good number would take the gas off the pedal for now, okay? So that means that we could see Trump allowing the trade war to drag a little further down the line, okay? If, of course, the NFP is worse than expected, then not only he will be under pressure to get this sorted out as soon as possible, but the rhetoric for a more aggressive cuts towards the Fed, of course, will begin again. So that's why it's a very, very interesting event, particularly for this NFP. Now, here are my handles for my Twitter account and also LinkedIn account if you would like to connect with me. On a daily basis, I do market updates, including technicals and fundamentals, of course. It's always a combination that really matters for the trader. And I also post other related content, of course, that is produced and shared by our amazing team. So before we go ahead, of course, there is the risk disclaimer I need to read out to you, and then we should be able to have a quick look on the agenda for the day and move on. Foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as the basis for any investment decision. Orbex Ltd does not guarantee the accuracy or completeness of any information or analysis supplied. Now, our agenda, we are going to start as always with the NFP preview. We'll see the analyst expectations, what economic indicators can help us with projecting the NFP results and why. I will give you my analysis. I will give you my opinion as well. For that, following some macros related analysis. We're going to choose the best bet to trade. Okay, I'm going to talk about some guidelines about protecting our capital, and then of course we're going to move on to the charts. So the NFP preview, analyst expectations. Let me just get my pen quickly here so I can highlight a few things here. So this month's NFP, we are expecting a 168,000 jobs to be added in the US labor force. That's an increase from 128, okay, to 168, which is 40K. It's not bad, right? Now, the October's data, which is the November release, missed expectations by 44K, okay? And 44K is not a small number, okay? So we have seen a contraction in the manufacturing PMI and also in the services PMI sectors, okay? And that's is a bit worrying for the US economy because it hints to a further slowing in the employment change, okay? However, we do still have these positive outlook from economists, positive projections, okay? They expect a similar expansion to what they expected last month. Last month, they expected 168,000 jobs to be added. This month, they expect 172K, okay? Now, note that November's release was, I think there's a word missing here, is the smallest one, okay, from the four at 128, plus is the fourth consecutive miss now. 1, 2, 3, 4, 5, 1, 2, 3, 4, might be a fifth one. But the headline numbers were revised up from 136K to 180K, as you can see that here as well, right? So that was the original number last month, and that was revised up to 180K. And 180K is actually a very good number, okay, for the previous. It will be interesting to see if this is going to be any revision on that number here in November. But of course, the most important thing is that what the headline number is going to be when it comes out, okay? Is it going to be above 168 or below, and by how much? What is the divergence that we're going to see? Now, on the next slide, continue with the analyst expectations, okay? We are seeing that the expectations are still a bit. We've had a 3.6 print last time. They are now expecting a move back to the 3.5%. We'll see if that happens or not. In November, analysts missed expectations, okay? They were expecting the same, but they got the 3.6 again. Now, in terms of the hourly earnings are critical, okay? And they are because we came down at zero, okay? They didn't change at all. So, which means there was no inflation, pretty much, let's say, from wages at least. And okay, and we haven't seen this number since December 2017, okay, which is 2 years from now. Now, the previous figure was missed by 20 basis points. Okay, you can see that clearly. Now, the yearly wages, which is also a very, very, very interesting number to watch, very interesting figure to watch, they were not a bit, because they came out at 3. The expectations were 3.3. Now, because we're still above 3, that still hints to inflationary pressures, okay? But still, missing for 30 basis points, that's quite a miss, okay? Expectations may be too optimistic. Given the mute we have on the hourly earnings. And I say that because we should be really expecting that gap to close to start believing that there might be some sort of inflation upside. Okay. Now, I want to also talk about the CPI a little bit because our earnings and also the CPI inflation are quite close to one another. The latest data showed that there was a year-to-year increase, okay, from 1.7 to 1.8. That was upbeat, beat expectations, but still stubbornly slow, okay, 1% up. And while at the same time, the interest rates are falling, okay? So with a fall in interest rates, and there's been a 50% cut over the past few months, we should be really expecting the inflation to be closer to the 2%, okay? And while it moves further away from the trend line, of course, as you can see here, we broke below that level in 2019. We came a bit, and it seems like we are like contracting in a pattern that is below the 2%, okay? At 1.8, improving, but we really want to see that moving closer to the top side rather than sliding lower again, okay? Now, for the preview, and I'm always talking about this specific slide for those who are interested in doing some sort of modeling, we need to look at lagging and also leading indicators, okay? We need the ISM manufacturing and also non-manufacturing because business conditions around those sectors, they give us hints about the potential increase or decrease in employment activity. Challenges, jobs cuts and jobless claims. They show information on layoffs and how many people claim for unemployment benefits. And also the jobless claims, since they come out on the weekly basis, you know, it's considered to be, it is a lagging indicator, but it's considered to be having faster momentum, let's just say, because of course we get the data out on a weekly basis rather than, you know, every month or whatever. The ADP Non-Farm Employment Report, which was pretty bad, if you asked me, it provides some monthly employment data in the private sector, okay? It's just released by a different organization, let's say. Now, just don't forget, because everybody seems to think that ADP is like a pre-NFP value, but that's not the case because it really samples only 60,000 eligible households, okay, versus 643,000 when we're talking about the labor of Bureau and statistics in the US, okay? So we're talking about a 1 to 10 ratio, okay? So you can consider that, I mean, you know, that divergence can be huge at times. Consumer sentiment and confidence, University of Michigan, and also the CCI from CB. The survey used to measure behavioral mood and consumer optimism, hence affects spending and saving. So we'll get signs about the business cycle with these two. And then, of course, the leading indicators, treasury yields and equities, and also the crude oil prices. When yields are up, the market sentiment is bullish, okay, which means markets are thinking that the NFP numbers will be upbeat. Equities are assumed to be positively correlated. And in terms of crude oil prices, when crude oil prices are up, the market expectations are somewhat positive as well, as the boost in inflation raises prospects for higher wages. So, in the next slide, I've put together a table that I always actually put together before the NFP. it's a very simple step in finding out what is really happening with economic data, okay? And what I can see here happening is that most of my data from the US, the most important at least, we have economic and lagging indicators as well, are negative, okay? 1, 2, 3, 4, 5, 6, 7. 1, 2, 3. So 7 are bearish, 3 of the economic data are bullish, okay? So that's like 65 versus 35. Okay, actually let's just say 66-33 or so in terms of ratio, that we are 66% positive, 30% negative from economic macro perspective. The leading indicators, though, which are the daily live prices for treasury yields, equities, and crude oil, are up. Does this mean that institutions believe that the NFP is going to be positive? That's a very good question to ask ourselves. But what we will also do is we'll just also check those a little bit in a few minutes, check again to see if that has changed at all, because I did this table like an hour ago or so, maybe even 2 hours ago. So maybe we had some changes on that aspect, okay? Now, how we can choose the best pair to trade, okay? There's two different ways. I like to actually use both, to be honest. The best one for NFP after the event, to be honest, I would consider, or when selecting a pair, is to check the divergence between your interest rates. Okay, is the interest rate differential or yield differential, call it whatever you want. So what we see here is the interest rates from all central banks around the world. Okay, so the one with the lowest interest rates is Switzerland, the SMB. The one with the highest interest rates still is the United States plus the Canadian one. Okay, so is Canada going to be becoming the currency of choice for carry trades and also, of course, as potentially safe haven or not? Now, the thing is that we can trade, for example, CAD CHF, right? Let's just say, but since CAD and CHF are not really directly tied to the US data, we can ignore that. What we could instead is trade USD CHF, right? So what I would want to do, since the Swiss franc is the worst performing in terms of interest rates, in case the NFP becomes positive, I want to buy dollar Swiss franc, okay? Because the Swiss is the weakest against the dollar, okay? This is a very good way to consider that. Now, obviously, if the US data comes out worse than expected, we want something to be strong. So what would we want to do is trade the US CAD, okay? Because the Canadian one is the second, actually is even in the first place. So we would want to sell the dollar CAD, okay? And I hope that makes sense, right? Now, the other thing to do, of course, is to look at the strength meter. Euro is very weak, okay? So in a potential USD upside move following a good NFP, we can sell euro dollar. Okay, that would be a good sell considering how weak the euro is. Now, if we look at the Aussie and also the yen and also the Kiwi, they are very, very, very strong, okay? With Kiwi and Aussie being the strongest. This is today, the strength, market strength of the day, right? So not only can we trade Aussie, USD, and New Zealand USD, okay, if, of course, the NFP is worst, so we would buy that. What we can also look at is the fact that the Kiwi has been moving over the past few days has been really moving up while the Aussie still lags. Okay, so this is the selection of the pair if we consider that, if we take that into consideration. And that is because sometimes we can indeed look at these interest rates, but sometimes we also need to consider about forward guidance, okay? Because New Zealand is at 1%, Australia is at 0.75, right? So Kiwi is a much better option from that perspective, but also because the New Zealand, they have, or has noted that they're not really looking to, to further cut rates, at least in the near future, whereas Australia, RBA was a little bit more dovish. So for that reason, and we also got a bad GDP figure from the Australian dollar. So pretty much this is how I select my pairs, right? Now, before we jump to trading, of course, and trades, you need to know a few things, okay, that I like always to tell. If you don't know where the market is heading, and that's the case usually, right? Avoid trading during the NFP or any other sort of data that is causing high volatility and whipsaw effects. Apply a protective stop if you decide to enter, okay, and also take profit. Risk management measures not to bypass emotional hurdles. It's easier to set it and let it rather than watch it and trade it, okay? Close out of your positions is another way if you want to avoid risks, okay, ahead of the release. You can hedge your positions, that's another way, in case your risk is minimum, okay, if you have a long-term trade or something. If you're eager to trade despite the warnings, well, I would again suggest is do let the markets come down, okay, like at least 15 minutes, 30 minutes, even an hour after the NFP, okay. So you at least avoid the big institutional whipshows. And the other two things I want to say is, of course, analyze the data post-release is exactly what we'll do here today and every NFP, okay, because it's very important to have an idea of where the markets is going to go, okay, and that is from economic perspective, from macro perspective, even politically speaking, okay. And something else which is very important as well, you really need to pay attention to the divergence between the actual and the forecasted value, right? If we're expecting 120K and we get 115K, it's not gonna do much, okay? It's not really a miss. Don't just look because it's highlighted red, then it's a bad one and let's just sell straight away. It's not how it works. We need to see good gaps. We need to see at least like 40K or something. So if we get from 120 expectation, we get like something below 100, like let's say 95 or something, it's okay to trade, okay? This is what determines, the divergence is what determines the spread, the price spread, okay? Don't forget that. And of course, now I want to go to the charts. And I'm not sure if you have been following our market insights, but we're really interested and want to provide you with Elliott wave analysis, okay? We have been doing that for a while now. I'm not going to say that I will ignore what's happening with the structure of the markets and Elliott wave theory, but I want to say that when we are trading the NFP, what really matters are the support and resistance levels, okay? So for the euro dollar, on the 1 hour chart, I'm still expecting prices to move up, right? But you don't know whether they're gonna go lower, and they can go lower up to even like 10.28 or so. Now, but that is medium term, it's not right now. What we wanna see right now, we want to draw a few potential levels that are going to help us identify entry and exit points, okay? And of course, one is down here. Actually, let me just draw those so we can also see the levels appearing up on the charts, okay? maybe even like go lower. Okay, let's just go to the 15-minute because we have very good view in trading view anyway. So what we want to do on 15 minutes, one level is here, one level is here, okay, and then we're looking at 1, 2, and on the downside we want to go over here and over here. Okay, so it is as easy actually, because nothing else matters during the NFP, trust me. Euro dollar, right? We talked about Kiwi. Let's do that on Kiwi as well. Euro dollar is for a sell. Kiwi is for a buy. So on that side, we'll go down here. We're on the 15 minutes. On the top, I have to go to the top of that candle anyway. That might be a bit far for an entry, so let's just draw that one as well. And on the downside, we can go to this low as well as potentially, yeah, that level. And on the upside, we're looking at, you know, pretty much nothing. There is no stop to that, right? What we can do is just draw a level over here and see if this is any close, and then go over that one, which comes exactly where, pretty much, not exactly, just a tad higher compared to where we are now. Okay, so euro dollar, Kiwi, preferable than the Aussie, so let's leave Aussie out. Let's go on dollar yen, pound yen, and then also the S&P. On dollar yen, one level here, second here. Let me move that. Let's find another activity level, which is going to be there. Okay, and then of course, on the upside, we can draw that level here as an entry. Here, this one, no, it's already taken. It's already taken as well. Well, you know, to the bottom, to the downside, what we could do ideally is just draw that one over here. Okay. Let's go on pounds, and then we do equities or gold or something, whatever you prefer, actually. We did the ones that were very interesting to trade in case we have a positive or negative effect, right, from the markets or event, let's just say. So on the top side, on the pound, we're going to draw our first resistance over here. Then on the downside, we've got to touch that one over there and then go all the way down. Okay. Now, after that, this is the one that follows. High activity level on the upside, we're looking at that one. And then we can also look at some round numbers. This is from 31 to 60, it's like 30 pips. So you can look to add another 10 pips or so on the upside for this. Okay, but it's a bit risky. Ideally, what would you prefer to do if you decide to enter is take 80% of your profit out here and leave the rest to play in, move your stop to break even, and you're done for the day pretty much. Let's just have a quick look on gold. Gold is moving up already. Interesting development. I has to go here. It has to go here. Then this one has to go to the bottom. We have a very good activity level over here. We can be used as an entry, and then we're looking at this level over here, and we're looking at this one, and on top we're looking at this one again. You see, some of the levels are quite far from being reached, whether they are on the upside or on the downside. That's why sometimes it's also preferable to look at how pessimistic or optimistic your targets are, right? And pick the pair that you want to pick depending on that as well. Because if the next level is 100 pips up, obviously you have to select a different pair, right? You're not going to get a 100 pip move often whether it's NFP or whatever that is. And on the S&P, our level is here. Then we'll have a move to the downside, a potential move down there. We have to draw that into these two levels touching together over the top. And then this, okay? And last, this one over here. Might be too far, this one is better. So what I want to do now is just change, of course, these to have 6 charts over here. Where are the 6 charts? There we go. 6. So we've got the S&P, 15 minute. Let's just let it just load a bit. 15-minute S&P. Yeah. And then over here, let's do euro dollar. It is euro dollar. That's good, but that should be already drawn. And it's not. That's weird. Oh, it's the daily. Okay. That's a bit weird. This one is the pound. For some reason, it seems like the levels we just drew disappeared. Yeah. Gold. You see the markets are moving already, right? Time is not there yet. S&P we did, euro yen, dollar yen, sorry. And this one, pound. We did the pound. I think we did the pound. But you see already what's happening, right? I really want to see what's happening because the time is there already. Let's see the updates. A nice move on gold, moving down. Very nice move on dollar yen, moving up. Okay, we talked about those levels already to the upside. And gold, we talked about these levels too, you see. This is our pound, which we had drawn a level here. It is already taken out, and the next one was down there. S&P is not moving much, which is okay. The interesting thing to watch is that this is a good NFP. This is a huge headline number of 266,000 jobs, okay? So we're really looking at an over nearly 100,000 jobs more than markets expected. Now the question is this realistic? Are we going to see a revision in the next month's release? It's very likely to see a downward revision, but at the moment, and since we've got the results, right, what we want to do is, we talked about doing dollar Swiss franc, didn't we? Let's just do that one here. Dollar Swiss franc is moving up. We don't want the 2 hour, we want the 15 minutes. There we go. Okay, so crossed the first level, 98.90, crossed the second level, and it keeps moving up. And why do we want dollar Swiss franc? Well, we want dollar Swiss franc because we said that it is the dollar that has the biggest divergence, the bank, the Fed, against interest rate deposits, okay? So we really got a very good yield differential between the dollar and the Swiss franc. That's why we want to be buying that one The other one we talked about was about selling euro dollar. Okay, we talked about selling euro dollar because euro seems to be quite weak, and that's the case. Okay, we already reached the target that we've had, and the entry would have been here. I don't know, for some reason it keeps deleting the lines that I'm doing. So next time I will just have these 6 charts out already and then start drawing, just to make sure that we can at least be able to visibly see what's happening in the markets. Okay, so I would prefer now to move on to the big one, actually. See what's happening here. This is the S&P, which for some reason is not really moving up. Let's just understand why. Okay, the average hourly earnings, as I said in the beginning of this presentation, I thought that they are too optimistic with this expectation, okay, to go from 3 to 3.3, and on a monthly basis to 2.4, 0.4, sorry. That was a bit of too much, but we had a revision here on the previous one. Okay, I'll be honest, I'm surprised with how good the results are, I'll be honest. We had an upward revision again in the headline number from previous month, which brings that much closer to the estimate from last time, no? They're expecting 168, and they got 156 now, like 12K only out. Very good. Very good data. So let's do a quick analysis on euro dollar. Okay, if you were here watching, we talked about euro dollar. We said in case the US moves to the upside, following of course a good NFP, the best thing to do is sell the euro dollar, because the euro was seen being very, very weak in today's trades. We also talked about buying the dollar Swiss franc, okay, and that has already given us some good, would have potentially given some good profits if you're in, I'm not sure. We've already drawn these levels and they're already taken out, okay. We talked about Kiwi as well, but we talked about buying that. So there's no reason to look at it at the moment, because there will be no buy on New Zealand against the dollar, given of course that the NFP was indeed positive. Which ones did we talk about? Let me just go back on the slide. So we said the euro was very weak, okay, and this is what happened. Okay, so number 1 would be euro, number 2 would be the Swiss franc, okay. Then as you see, pound and the dollar as well are pretty much equal in terms of strength. Were actually, not are, were, right? The important thing to see is that these 3 figures, the leading indicators, okay, were indeed what we should have looked for. I said previously when I was going over this slide, that it is the leading indicators that matter most. And if during the trading session, okay, of today, because today is the NFP, the markets are positive, which is the treasury yields, the equities, and also the crude oil, and they were positive, that means that institutions are expecting the NFP to be positive, and that's exactly what's happened. Okay, the data tells us a different picture, okay, but at the end of the day, expectations for incoming data are probably better than what we've got over here. So in the month of November, whatever has happened and is expected to be better than the previous figures. Okay. Now back onto the charts. Dollar yen, always a good option. Actually, euro dollar and dollar yen are always a good option, right? So it doesn't really matter what the interest rate differentials are. It doesn't really matter what the currency strength meter says for the day. What really matters is that everybody is trading them. They are the majors, and they are the ones that are most liquid. So you're likely to also experience less slippage compared to other pairs, okay? Because don't forget, when liquidity is high in certain pairs and the volumes are high, then it means that volatility can decrease, okay? Have a look at how volatility and liquidity works if you want. We have a lot of posts on our blog as well explaining exactly what they are and how they work. But in a time of very, very high liquidity like this, everybody's entering a lot of billions into the market, okay, at this NFP, maybe even trillions, to be honest. What we really want to know is where is the money? And the money is in the euro, dollar, dollar yen, and of course other assets. But why want to know that, especially if you are trading the event itself, because you want to avoid slippage, okay? Plus the spread, of course. Now let me check the pound. Pound bounced exactly at the level withdrawn, okay? And it created a false break over here, okay? You can clearly see the false break. If we draw that line over here, there you go. A tiny bit, right? A tiny one, but it's still a false break. Now the question for those, okay, gold has done a very good move, no? So can you imagine, like from 1475 down to 1465, it's $10 move, okay? It's taken out, it's been taken out. And the thing is that we don't really see the retracement we see on the pound, for example, because pound, for the last 15 minutes, so we're still on the 15-minute candle of the NFP, right? We're still another 5 minutes for it to close. Has gone all the way down here and reversed like 50% of its losses, right? Even for the 10 first minutes. But gold has gone down from up here, right? And like it hasn't even like this, maximum 15% reversion, right? Which is never good. It means that there is a lot of downside risk still. Dollar Swiss franc, the same situation. Dollar CAD seems to be really like, that's a massive move for some reason, which is very interesting to check, of course. For those who don't know, don't forget that we don't just have the NFP data, we also have the employment data from Canada, right? And what this looks like to me, it looks like that Canadian data came out worse than expected, okay? And that's the case, not just worse than expected, but way worse than expected. Actually, to my surprise, this is a minus 71,000 jobs figure. I don't really think I've ever seen a figure like this before, to be honest. There was a minus 51 on the 7th of September, minus 88, okay, in February 2018. So there was a worse number than that, but not for this year. That's why the Canadian dollar is really, really, really weak. So it doesn't really matter, yeah, what we get here. Yeah, it doesn't, because what really matters is that the data was much worse than expected. So we're seeing the dollar CAD has made a huge move down from 131.80 to 132.50. We're talking about 70 pips, okay? And 70 pips is massive. The thing is, nobody would have actually let that run, okay? Still buying, there's still a lot of buying pressure, right? Which makes me think, we even broke about that level, right? That makes me think, where are we? 1 second. Let's just draw that one too. Okay. That makes me think most likely going to reach that level over here, the 132.55 or so, potentially create a false break, and then move lower. Move lower because what? What happens in cases like this is that usually institutions want to start taking some profits, right? Now, considering, of course, that this piece of data is very critical for both the US and Canadian economy, we could indeed see that bouncing a little bit and then continuing higher, okay? But I'm telling you, the next level to look at, if we have a break above that one here, is this one, 132.76, okay? And the next one, well, we don't know if this will continue going higher. It really depends, but it could be up here actually, right? We could reach that level. Obviously, before that, we get this one over here, 133, just a little bit below 133. So it could be a false attempt to take over the 133 level, but we're still from there, okay? We've just pretty much just closing the first 15 minutes of following the NFP. S&P is going up as well, finally. Now it keeps moving. S&P is going up as well because it was a very good report, surprisingly good report, I would say. Now, the participation rate came pretty much unchanged, 63.2 compared to 63.3, not much of a difference there. But this number is huge, 266,000 jobs. And that is the second best, no, sorry, the third best for the year. Now, let me tell you something, right? We're going into Christmas period, which means a lot of people start working because there is a lot of demand for workers around the period of Christmas, which means that in January and February, we could also see the numbers increasing, okay? So I wouldn't be surprised if that continues being the case with the NFP for next month. We're still, of course, a month away, even a bit longer than a month. And we also have the Fed's decision next week, which is more important than anything else, to be honest. Aussie had a good move to the downside, but as you see, because it's still strong and the Q is strong, we had a full reversal down here. Not full, sorry, 50% reversal, right? But the QE reversed like 20% of its losses. You see that just by checking the strength meter of the currencies for the day and the interest rate differentials, and also the momentum over the past few days, you can really identify not only good trading pairs to trade for the NFP itself, but you can also identify levels for take profit and stop losses that are reasonable, and when exactly, how to time your trades. Because when, for example, we're talking about Kiwi, which is the strongest of the past few days, right? We know that whatever the economic data tells us is going to be momentarily, okay, this move. And this is now proven because we've had all this move down to 65.50, below that round number level, and we moved all the way up, retracing 80% of it because QE is strong, whatever the case, okay? Aussie, which is not as strong, retraced 50%, okay? Now, the Canadian dollar, okay, we see that it's actually it's gone into pieces. Dollar Swiss franc retraced, but after it's taken out that level, okay, the 99.14 or so, now we're really trading near the 99, which is a very, very, very strong psychological level, right? So price is really retraced down there, which makes this scenario a bit more uncertain, let's just say, the scenario to the upside, because stopping at the 99 means we're either gonna go a little bit lower and then break it, or we're gonna return back, have a full reversal, and then of course continue with whatever the outlook will be indicating. Gold, as you see, not a big retracement because it's weak, along with the euro. The euro actually did quite better though, because we've really taken out this level, okay, the 110.70, and sometimes it's also about operations, right? And by operations, I mean what is really the lowest level that we've seen since the December 2nd, right? This is where a lot of trades were placed, okay? So that's taken out now. These buys were triggered, okay? We could see price, of course, moving lower, or we could just see prices moving up. So don't be surprised if you see the markets reversing. And I'm saying that because you are probably just assuming that because the NFP was good, this momentum is going to continue. I'm telling you, it's not going to continue, okay? I might continue for an hour or for 2 hours or whatever, and then it will reverse. It will reverse for a 50% retracement, or for a full 100% retracement and a continuation to the upside. You never know what to expect, right? But the truth is that since you're looking for a quick buck, you can come in and out quickly at those levels, and job is done for the day, okay? It's also Friday. There's no reason to risk anything. You can have a relaxing weekend, get a fresh breath, and Monday come back into the markets with a clear mind. Now let's have a look at the dollar yen as well. Dollar yen seems to be okay. Let's just identify the strongest and weakest pairs from the current price action, right? Euro dollar is weak with 50% retracement. Dollar yen, yen is weak with like 10% retracement, 20% max, okay? So that doesn't really make it a good option to see a good further retracement, let's say, right? Pound, very good retracement, stronger than both the yen and the euro. Gold is weak. The retracement is not as big, and actually trades similarly to the yen because they're both safe havens. It seems that they move hand to hand, to be honest. Dollar Swiss franc. It seems to be stronger than the yen and the gold. However, the dollar is stronger, and we have had a good retracement, to be honest, like 40% or so. So we can expect prices to move a little bit lower here and then move up, or whatever the scenario would be. Dollar CAD, as I said, I've just explained like 5 minutes ago what we can expect on this one, but this is a huge candle at 70 pips, okay? Quickly, the Aussie, very good retracement as well, over 50%, which is important, okay, because the 50% is really what matters. Obviously, other numbers matter too, the sixth one, for example, retracement or whatever, but in the first 15 minutes, if we have a 50% retracement, this is a good indication, okay, that most likely is not going to last. The Kiwi is the strongest, okay, against the dollar. As you can see, we've had an 80% retracement. Actually, why not? Just measure it. Yeah, around 75% retracement, okay, on the QE. Now, for those who know about the dead cat bounce and also the hummingbirds, these are strategies that are traded after the NFP, right? Which means we are waiting for the markets to settle, which is pretty much what we could be doing at the moment. We wait for at least for the time to close on the hourly time frame, right? So that's in about 7 minutes from now. And we see how the markets develop, we need to turn onto the hourly chart, okay? And what we need to look at is, let me just delete those levels, right? And then I will just get the Fibonacci tool to make it a bit more easy to understand. There is two things we need to do. One, of course, draw the Fibonacci from here. Okay, from here to the lowest level. Okay, let me just add the levels as well. 38, the 1, the 50. Okay. So what we're looking here is the retracement from the high down here. What else we want to do is take another Fibonacci and draw from the top of that hourly candle to the bottom. Okay, and here's how we can measure the retracement on the hourly base. Okay, you can do another thing as well, is maybe just draw from the opening, okay, down to the closing. Now, the strategy works like this. You draw that, and what we nearly, I want to say always, but what most times happens is that we are getting bounce down here, right? We'll get the 50 retracement, and then prices continue down. Okay, it could be a smaller correction, right, to the 38, or it could be deeper to the 61.8. Now, the 50 over here is also the 38.2 of this move, okay? And it might be even the 38.2 of the bigger Fibonacci move, which is over here, you see? Just between. So that could be, let's say, the false break in case it happens. Okay. Now, funny enough, the 50 of this level, okay, over here, is exactly the insertion of high momentum, okay? And what we're talking about is this, because these candles matter, guys, okay? Don't forget about the candlesticks. What we see in this candle on euro dollar on the 1 hour chart, we see the opening of the price, okay? Now, we're still having 4 minutes for this to go and close, but consider this: if this candle closes down here, close to that level, right, or actually even below this activity level, it's a bearish one, okay? But what it also means is that bears really push to take out buyers over here, right? So if they take them, the moment they will close their trades, the markets naturally will start moving up, right? And what will happen is we'll go lower and lower, but at some point, this is going to come up here, right? And meet this high insertion level, which is the 110.89 or so. Because at that moment exactly is where this trader over here will take out 100%, yeah, pretty much, of his profit. Let's just assume this is an easy way to understand, yeah, what is happening in the markets. Now, there is, of course, different signs you can expect to trade something like this. You can expect, of course, the hourly candle, okay? Then they would have another candle going down like this, another one like that. Then what we want to see, a doji, okay? To start really considering of buying this mean reversion, because it's a mean reversion, right? It's the DCB, dead cat bounce. And from here, we can start looking again for prices to move lower in case that happens, of course, because we could see a break over here. We could see that happening, moving to the upside. Now, the truth is, from an Elliott wave perspective, is if you have got this labeled as 1, 2, 3, 4, and that is the 5, right? Which means that we're really done a cycle over here. So we can expect an ABC now, which seems to be forming perfectly to support that scenario, right? Because we want to see really, we want to see prices now after this full move to the upside. We want to see a retracement. If we assume the first one ended right here, this is could be an A B, and a C. Okay, and what would be the case is that since we're over here, AB, we want to do the minus 061.8. It looks like a flat. Okay, if that is 4 and that is 5, of course, right? So 4 and 5 over here, which means that we are going A, and this is a B, and this would be a C. Okay, and actually more accurately, because this is not a full 100% retracement for wave B, I want to do that. Okay, so the 10,300 is where potentially wave C could see an end. The 100 Fibonacci extension is also a possibility, but that wouldn't make that a flat. Okay, so we're looking at this potential scenario to play in. The other one could be not supporting this view or the economic data we've just seen. It could be that we've got, this is like a triangle pattern. Okay, so we've got and then this, and we're really looking to move up. Okay, we've got A, B, C, D, E, and we're moving up for another move to the upside. But that's not really likely to be the case. If that was the case, then we're really looking for wave 5. That would be wave 4, right? We're really looking for wave 5 to come and meet this trend line up here to around 111.50 or so, 111.68. So I will take a couple of questions quickly, if there is any, of course, and we'll have to wrap this up for this week and for this month and for this NFP. I'll wait a few seconds, see if there's any questions. If I'll go away before you are able to send something through, feel free to find me on Twitter, on my LinkedIn, and go ahead and send your message. The important thing is to, since we've seen the closing of this candle now, is just to wait for another hour to see how this candle is going to develop on the euro dollar, at least on dollar yen as well. We've got the same sort of move, similar move. Gold seems to be under pressure, but we've taken out that level as well, so be cautious. The dollar Swiss franc taking out that level, and we had like 50% retracement, so be cautious as well on that one. Dollar CAD, I mean, it's probably going to move a little bit higher, to be honest, right? But if we take that level out, we're really looking next at 132.70, so, or before that, 132.65. Okay, so I want to thank you for joining me in this NFP, in this surprising NFP. In case you haven't had time to make questions, as I said, feel free to connect with me. Thank you for the attention, and I hope it was a helpful webinar and trade session for you. I want to remind you that, of course, we have an amazing trading blog where we cover technical analysis, fundamental analysis, Elliott waves, how to trade the news, what is volatility, liquidity, a lot of different topics, a lot of analysts and definitely a place where we can improve your trading skills responsibly. So have a nice weekend, and I'll see you again on Monday following my market insights.